Good afternoon, traders. This is Roland Duki here. Today, I'm going to teach you how to use the Fibonacci tool on TradingView. So if you have the app tradingview.com, you can go into that and register. You have a free trial for one specific chart, or if you want, you can change the charts. But let's just get straight into it. On the left-hand side, we have toolbars here. So we've got to look into these various toolbars and look at which one gives us the Fibonacci. So we go into this and we look for Fibonacci, click on Fibonacci or Fib retracement. And then we look for our highest point, which is approximately here, the highest point in this region. We would drop that to a lowest point. And what will help you a lot is that if you have your magnet icon here turned on, it will pinpoint exactly where you should be. So looking at this on the 4-hour NASDAQ 100 chart, we pick our highest point to the lowest point, and then we have a whole lot of variables that pop up on the right-hand side, which is from 0 to 100%. So if price were to go up in a bullish direction, price, we've taken our 100% as here. So price will retract or pull back. And usually it will pull back to a region of about 61.8%. And this is where 61.8% is currently. So when price does this, it then bounces off 61.8%. Now 50% and 61.8% are common grounds where price will bounce off and then continue into the trend or the direction that it was originally at. So if we were going bullish, we would go into this direction and then it will retract back or pull back to around 61.8%. So this is where you could do your entry level for your buys. Or if it breaks that as a support, generally 50%, 38.2% as well, where you would do your buys and then price would continue in the direction that it was at from where it fell. So your question is sometimes, when do I enter? Your entry points are 50%, 61.8%, or 38.2%. That will give you an entry point into taking your buy. That's your entry point. And then you want to know, when do we exit and how should we work this out? So if we go on the right-hand side, we will try to minimize this so we could see majority of our chart. Price would come to 100%, which according to this chart is approximately there, near to the 100% from where we started to draw our Fibonacci. And when price goes past this 100%, your Fibonacci gives you 127.2%. Now you can amend these variables on your settings of Fibonacci, but these are the common percentages that are used. So when price goes to beyond 100%, that is regarded as the extension. So in other words, from 0 to 100 was the trend that you looked at. When it pulled back to 61.8% is when you decided, okay, this is the point I need to enter in a buy. So you got into the market, you did your trade, and then the price continued again. All this now is in your profit range, which means you are now gone into 100% at this point. And then beyond 100% is when we call it the extension. So you can continue onto 127%, and generally 127% is for TP1 that we would use. And comfortably enough, even if you close your trade at 100%, you've made sufficient profit already, just under 40% worth of profit you've made. Because if you look at from 0 to 100, it pulled back 61.8%. That is 61.8% away from where it started at your 0 point. You've got almost 40% worth of in profits. And then if you continue to 127.2%, that could generally be your initial TP1 if you want to, or TP2, and you can close your trade there on, because you're not sure how currency or the asset will behave, especially with NASDAQ 100. It operates a lot around fundamentals, and almost every day there's some major news that's been broken out at the US. So that affects NASDAQ. So my advice is that when you enter your trading at 61.8% or even at 50%, come to 100% or 110, 120, 127, and then close your trade and be happy for what we have accomplished for the day. And if you want to know the history about Fibonacci, how it came about with these percentages, and what have you, you look at the other videos that we've done, and that will give you an idea or teach you why Fibonacci has came up with these percentages and why these have been used. So I hope this helps you. I hope it gives you a lot of motivation to monitor the chart. It's good to be patient. It's good to watch as to how the market goes, how the market behaves, where it is, and when it starts to pull back, you know it's following what you have planned. When it hits your buy limit, you know that the trade is has been filled and is in motion. When it comes to 100%, close your trades, or 127%, close your trades. You know, generally it pulls back here. Sometimes it's because of fundamentals, and sometimes it's because buyers that have bought further down here, they decided, okay, listen, it's fine enough. We want to close our trades. We want to take our profits. So when the buyers start taking the profits, then the price start dropping a bit because sellers are now controlling all of that. And when you people like yourself, for example, take trades at 61.8%, then it starts going into upward movement, which is now gone into profits for you, going past the 70% and 78% into 100%. And then you start closing your trade and start taking your profits again, and price will probably pull back again, and then you could take the further trades again. But that's how Fibonacci trading actually works. So if you would like to practice it on a demo, practice it with a very small lot size, using risk management, and practice it and become good at it, and let it become a strategy that you will enjoy and that you will profit from. And I hope this video helps you, and I hope that it could be something that will add to your bank balance and add to your equity and add to the balance of your trading account. And if you like this video, please give it a thumbs up, hit the like button, share this video, and thank you so much for watching, and wish you the best. Thank you.